Hello to all traders and welcome to our monthly engagement for the US non-farm payrolls. Again, today is Friday, the 7th of February. It's the second NFP of the year. If you remember last time, we've seen a miss in the NFP numbers, in the figures. However, don't forget, despite the miss, the US jobs market again showed that there is some significant growth in the jobs market. So as usually today, we're going to see, of course, what's happening with the forecasts, the estimates, what markets are expecting from different polls, of course, from different economists. And we're going to dive into technical analysis mainly today. I want to focus actually more a little bit on technical analysis. We're going to, I will try to do the fundamental part, which is very important as well. I will try to do it in like 10 minutes, and then we'll jump straight to the charts to analyze pretty much some, to draw some support and resistance levels, some important levels that are going to hopefully help you identify some good areas, some good zones to either decide whether you want to close a trade, to open a trade, or hedge a trade. Although I will always remind you that during the NFP, it's a very risky and highly volatile time, okay? And I would recommend everybody to wait for the post-reaction, post-NFP reaction, because whatever sort of momentum you're going to see in the during the release, during the print, is probably not going to be sustained for a long time. Anyway, you are able to see in these first slides my Twitter handle and also my LinkedIn in case you want to join. I post on a daily basis technical analysis using Elliott waves and other, of course, posts related to the Forex markets. Now, going off with the risk disclaimer, of course, Forex exchange trading and investment in derivatives can be highly speculative and may result in loss as well as profits. Foreign exchange and derivatives trading is not suitable for many members of the public, and only risk capital should be applied. This webinar is provided for information purposes only, and no information contained herein constitutes a solicitation for the purpose of the purchase or sale of any commodity, security, or investment, nor should it serve as the basis for any investment decision. Orbex Limited does not guarantee the accuracy of completeness of any information or analysis supplied. Now, I want to go ahead and start with the preview first, and I will just grab the pen over here from the software. We see that the current estimate is 161K, which is again larger than the 145,000 last time. They are expecting, analysts expecting an increase of 23, actually no, not even that, it's actually 16K, right? In December, which is the January's release, right, expectations were missed by 23K, okay? We're expecting 168, we received 145. Now, the data points to stronger jobs, okay? And it is very likely that we are going to get at least a figure above the previous figure, okay, which is 145. And now, this is, of course, because of the latest US reports. For example, the ADP, private non-farms, gave us a very good number yesterday. The ISM as well delivered some very good numbers. We're going to look at those in detail actually in a couple of slides. But for now, just know that January's release was the first one of the year, okay, and it did come out negative. However, know that the markets showed a good growth rate at 145K still, okay, because 145,000 jobs added is still a very good number. Now, for today's NFP, right, and given the fact that we're expecting 168,000, we could get a miss. I mean, we could get anything anywhere between 145, actually 45 and 155 or 180. If we get a better print than the estimate, some would suggest that prices are going to move higher for the dollar, right? Now, if we take into the consideration, and I always actually remind you on the live webinar, if we take into consideration that the divergence between the forecast and the actual figure, if we just suppose it's 175, it's only 7,000 jobs, then I wouldn't really look at a bigger move than like 15, 20 pips, to be honest, right? Now, given also the fact that we are expecting FOMC in a few weeks' time as well, it might be, for the markets at least, for economists and traders, institutions, it might be a good opportunity to get into the markets quickly and get out of the markets quickly instead of providing any sort of directional momentum, at least in this particular NFP. Now, on the second slide, let me just delete these all quickly. On the second slide, just diving into the analyst expectations a little bit further. The unemployment rate is expected to remain at 3.5, right? So this is a neutral expectation from economists. The numbers, the figures, as we said, 161 versus 145 previously, okay, and expectations are 168. Now, in January, just as a reminder, we've had the unemployment rate matching expectations at 3.5%, right, which, just to remind you, is still at a multi-year low, which is good for the US economy. Now, the hourly earnings is what we were really paying attention last month. And this, of course, is the case because the Fed is making decisions based on inflation readings, right? Now, we've had the previous hourly earnings back in January giving us a 40 basis points beat, okay, which is indicative, of course, of rising inflation. However, the yearly figure remained below the 3% year on year, and this is a target of 3%, right, at 2.9, despite the month-on-month increase. Now, when we are on a low interest environment, that shows that inflation remains stubborn. Then you might ask yourself, what exactly do you mean by low interest environment? The US is has actually the highest interest rates at this moment. Yes, it is the case, but in general, it's not a high interest rate compared to historical data, right? And when we have seen consecutive rate cuts over the past few months, then that seems again to be suggesting that, while interest rates are falling and inflation isn't really picking up, then there might be a need for further cuts. And this is something that the Fed Chair Powell also hinted, but probably after the first half of the year, right? Now that, of course, might change depending on incoming data and also what's happening with China in general, because we're not only now considering the trade war, but also the coronavirus outbreak, which, as a note over here, I want to let you know that it's not going to affect the markets for this particular NFP, okay? If there is any sort of implications for the US economy, which again, I think they're going to be minimum, they're not going to reflect into this month's NFP simply because the data for the NFP and actually all the statistics are done around the middle of January, right? And that period, there was nearly nothing about the coronavirus on media. So forget about the coronavirus, at least for the moment, okay? Now, I want to actually mention something else as well. Despite the fact that average hourly earnings on a year-on-year basis remained at 2.9, we have the CPI inflation increasing, okay, from 2.1 to 2.3. The expectations were at 2.3, but I'm not really thinking at that as a miss, to be honest, or as anything that could be quite neutral, because the idea behind low interest rates is to have inflation increasing. And when that's gone from 2.1 to 2.3, this is actually showing a very healthy economy, and it indicates that policy in general is working effectively. But from one figure, of course, and from 1 month, we cannot really determine what's going to happen for the rest of the year. However, it is important that the inflation started picking up. Now, what we want to see really, we want to see the hourly earnings picking as well for this NFP. As always, I've been mentioning that there are certain indicators, economic indicators, that we need to look at before the NFP, if we want, of course, to have any clues about how the US economy is performing and how that performance is going to affect particularly the release, the print numbers for the NFP. There is lagging indicators and leading indicators. Lagging is the ISM manufacturing and non-manufacturing because they are showing us information about business conditions in manufacturing and services. There is a challenger job cuts and also the jobless claims. They show us information about layoffs and how many people claim for unemployment benefits. We have the ADP non-farm employment, which came out yesterday. We have the consumer confidence. That includes the University of Michigan and also the CBCCI. And then, of course, the leading indicators that I'm usually paying attention to. I'm actually turning to just a few minutes before we start the monthly webinar is Treasury yields and equities, as well as the prices on crude oil. As you may as well know, crude oil prices are very well connected to inflation, right? Higher prices indicate higher inflation. So now that means that when the oil prices are up, right, and this is a leading indicator, the market expectations are somewhat positive, okay? Now, on the Treasury yields and equities, when yields are up, the market sentiment is bullish, okay, as well, which hints that market participants are projecting a good NFP again, and the equities are assumed positively correlated. Now, what I've done, and as I always do, I've put together this nice table over here, and I'm weighing the pros and the cons, depending, of course, on the last round of data for the particular economic indicators. So we're looking at the lagging ones and also the leading ones. The lagging ones, as you're able to see, ISM non-manufacturing, the employment component, manufacturing, challenger job cuts, and other economic data that they are particularly important for the US economy, most of them actually are on the positive side, right? Which seems to suggest that we are going to get a good NFP print. Now, on the other side, if we look at the leading indicators, okay, Treasury yields and crude oil actually quite a bit, are not positive. Now, crude oil is very well affected by the coronavirus headlines, okay? So in this scenario, we might look at it with a different eye, with a different perspective, because maybe it's not as reflective of the current expectations. Now, equities are up on the other side, okay? And Treasury yields are down, and particularly looking at the 10-year yields, okay? So all the lagging indicators show that we're going to have a positive NFP, okay? That means particularly better than the previous figure rather than better than the expectations, right? However, the lagging indicators are showing to me that they are a little bit mixed. Now, these mixed sentiment from leading indicators is suggesting, at least to me, is suggesting that we might have the NFP being already priced in. As you'll be able to say for yourself, if you're looking at your charts, and I'm pretty sure you are looking at your charts, that we've had quite big volatility and big moves for pre-NFP environment, right? We've had euro, Aussie, pound, all the pairs actually falling against dollar, okay? And now they are reversing back to their opening prices or to their pre-fall prices, let's just say, right? Which seems to suggest that institutions are going in for a quick profit and they're coming out. Now we are again, just a few minutes before the NFP, going back to pre-fall levels, and we're going to see whether this market direction that started before this morning actually is going to continue or not. Now, the other thing I wanted to talk about, of course, because we really need to look at how the USD is going to perform against a specific a specific currency, right, we really need to look at the interest rate differentials between the countries. So as I said before, the United States has the biggest interest rates at the moment. The lowest ones are from the Bank of Switzerland. So in case the NFP comes out positive, a very good opportunity, at least in the medium and long term, would be the dollar Swiss franc. Okay, this would be a buy. Now, if we are to sell because the USD, the NFP is actually bad, then we would sell against the Canadian dollar because it's the strongest against the USD. However, we are also expecting the Canadian report. Keep that in mind, right? Next one would be, of course, the Kiwi. Now, the other thing we need to do to check really what's happening also on the intraday basis, although we check the leading indicators, which is pretty much US equities, the US yields, and also the US oil, we really need to look at the strength meter, okay? The currency meter shows us that the Aussie is very weak. The pound is actually stronger than any other pair at this moment. And this is another way to determine whether it is a good selection to have, for example, to buy dollar yen or to buy GBP USD in case the NFP comes out worse than expected. Now, the thing is that despite all of that stuff, we still can always trade the dollar yen and the euro dollar, okay? Because it's where all the volumes are coming through from, because these are the biggest trading patterns, right? So you know that euro dollar is the most liquid asset, so you might as well just, just go with that and leave everything else. Now, before we go into the charts, just to give you a quick, some quick suggestions. If you're a bit risk averse, it's better to avoid trading during the NFP. Volatility is very high. In case you decide to go in, make sure you are protecting yourself and that you have some proper risk management measures. If you have open trades, depending on where exactly you are on your P&L, you either decide to close them or hedge them, okay, in order to ensure that you're not at least going to lose risk, let's say, a lot of your capital, okay? The best way, if you're still eager to trade, would be to let for the markets to relax a bit, to calm down, and then decide whether you want to sell or buy a particular asset, because it's only after the markets have calmed down that we're going to see the medium term starting being developed, okay? So I would also propose to analyze all the components of the NFP report, not just the employment number. Look at the unemployment rate and particularly also the average earnings, both on the month-to-month and yearly basis. Yearly base, of course, is more important, okay? And don't forget, if you get a divergence lower than 20, 30K, it's not important, okay? So you're not gonna see markets really decisively breaking into one direction or the other, okay? Most likely it's going to be a mean reversion, at least for the short term, if not a reversal, okay? So let me just get my charts over here. And although you'll be able to see, I mean, for market insights on a daily basis, we analyze Elliott waves, but when it comes to trading the NFP, I'm not looking at anything apart Fibonacci levels and also some support and resistance levels, which are actually called high activity levels, right? On euro dollar, I've drawn the 109.85 and the previous low over here, 1.9635. I mean, it's just, I'm not even sure if it makes sense to name those levels. You can simply just open your charts pretty much, and you can draw the same exact levels as I'm drawing right now. Right now, depending on where the market is going to be, like at the minute before the release comes out, okay, we can always go ahead and draw further different levels, right? So for this moment, we are trading at 97 euro dollar, so a very good level to to enter the market would, for example, be up here, okay, the 731. But in case the NFP is proven to be negative, okay. Now the other level is over here, and the other level we can draw one down here. Okay, you always have to look at high activity levels, not particularly just support and resistance, highs and lows, okay, because they're not, trust me, they're not the only levels that you're going to see prices reversing, okay. The most active levels are in here, okay, where you get a lot of orders. Up here is a very low activity level, okay. You only had some sales going through over here. Yes, considerably a large amount, but it's not larger than anywhere between here, okay. Now, that's on the euro dollar. Let's have a quick look on dollar yen. Dollar yen has also drawn some levels over here. They are, since we're on the 1 hour chart, 9.8, this is 10 pips far from the current entry, so we can actually go a little bit lower for an entry. And since we are higher from the moment that I drew that one, then we can go a little bit higher as well on this entry as well, which is 10 pips away, don't forget, right? The other level would be over here. Okay, so you can use these levels as you wish. Dollar yen was quite an easy one, to be honest. Now, pound, which we've actually said that is quite strong at the moment, okay, and you can see that over the past few hours, actually, it managed to move all the way up, gaining back, reversing all the earlier losses, which I think is also the case for anything else apart the Aussie and Kiwi, if not mistaken. Yeah, Aussie and Kiwi are pretty much weak. Now pound. Don't forget, pound also has a very good pip value. So 30, this is a good level, but then of course we need to look at that one as well. 29.36 for a potential entry in case comes worse than expected. Then 29.3, then the bottom down here, 29.2. Okay, guys, don't forget that, I mean, if you're thinking that you're going to make a fortune, even in case that you are correct and you manage to get some profits, don't really think as the NFP as, that you're going to make a fortune. 10 pips isn't bad. 20 pips isn't bad. Don't think that because the NFP came out either better than expected or worse than expected, you're going to see markets moving 50 pips in one time, in one go. Okay, you will see the markets reversing, and this is mostly always actually the case. This is the whip show effect that we've actually talked in the past about, right? Now, another level will be over here because this is a high activity, a high momentum candle, okay? So another level will be over here, and that's on the GBP USD as well. Gold, I'm not even sure if we should look at it considering its volatility. I mean, it's better to stay perhaps away from commodities and keep an eye on euro dollar instead. Dollar Swiss franc, we've already reached the level I drew before, so we have to go for another one now down here, okay, which is like 10 pips from where we are, from where the top is. Now, the thing is that since we are far from that level, we can go ahead and draw another one down here for some partial profit, and then a break-even move for stop loss, right? Don't forget this, guys, if you're watching this, when we're opening a trade and we are in the money for like 10 pips or 20 pips or whatever, feel free to close a part of your trade and move your stop loss above the break-even, right? This is the only way. Risk management is the best way to actually first not lose your capital and then start slowly with small steps increasing it, right? So on dollar CAD, we are at 133.14, okay? 133 also a very critical level. Actually, where was it? Was this, okay, it's actually quite far from 130, but with the NFP, we could get that level actually taken out. It wouldn't be a problem, I think. The oil, we can draw a few levels on oil as well. And as we speak as well, I'm looking at the time, there's 5 minutes left. Don't forget that oil doesn't really move much, okay, during the NFP. I mean, as I said before, always have a look at the euro dollar and dollar yen instead of commodities. They are more volatile as well. Now, what I want to do is, why don't we just do a multiple chart over here? Let's do 4. Let's do 4 pairs. We're going to go down on the 15-minute chart. Okay, the 1 hour might be too much. And I'm going to set those also at a level where we can see what's really happening, right? 73, okay, there we go. This one, let's go for dollar yen. Dollar yen, look at this move on dollar yen. Let's go down on the 15 minutes. For some reason, I don't see any levels drawn in here, but it's okay. We can do that quickly without any problems. Okay, 1, 2, 3, and this one is a good one as well. Don't forget the top, but also don't forget that we are around 110 if we go higher up, right? And down here, I think we are okay on dollar yen as well. Over that one, I want to go for pound, because in case the NFP comes out was unexpected, pound is particularly strong, as we said, at the moment, right? So I will be looking at that for potential buying opportunities. We are on the 15-minute chart, which is okay. Let's draw again these support and resistance levels. One over here, one down here, one up here, one down here. Okay, and since we are, how many pips? That's like 15 pips away. The entry could be here. The top side, we've got it already. And it can be the opening price. And on that last chart, I want to look at the Aussie dollar, because we see prices moving lower and lower. Let me go on the 15 minutes. We have 2 minutes left. And don't forget that sometimes actually these results actually go in by magic to institutions before the release. That's why sometimes you see a pre-move, a very big effect actually. Now the Aussie dollar, okay, we can use this as an entry to the upside, I guess, and to the downside. What we're gonna do, since we have no bottom over here, right, we wanna go and use the Fibonacci extension. $38.2, then 61.8. Okay, so we are pretty clear, and we just have to wait for the numbers to come out now. There's 1 minute left. Markets are moving. Dollar yen is moving. It looks like safe haven is going down. Okay, let's see how this is going to pan out. Okay, dollar yen is moving up, euro dollar down. Pound, you see that? We talked about pound strength, and it seems to be the one resisting as much or more than any other asset. Now, if we go on the numbers, they're still actually loading, if you see that. Let me just put that over here. We're still loading. However, this initial move suggests that the numbers are good. Don't forget, as I mentioned in the beginning of this webinar, that I don't think, personally, we're going to see big moves in this particular NFP, okay? For many reasons. The most important being the fact that we are expecting an FOMC before the next NFP. The Canadian data are out, okay. Unemployment rate in Canada is very good. The unemployment change, however, jobs ended were below expectations. I think it would be good to refresh that quickly. Let's have another look. Okay, there we go. So, wow, that was a bit. 225,000 jobs. Yeah, but are we really seeing anything moving up? Not really. The average hourly earnings are 3.1, which is a number that we should really focus on, and one that we said we should focus on, because we were very interesting to see the average hourly earnings year-on-year basis also increasing, also reflecting CPI inflation, right? These are very, very, very good numbers for this non-farm payroll. 225 is 64,000 jobs added, more actually than the expected figure, and nearly 80K above the previous number. So despite that, though, we don't see markets moving much, okay? The average earnings on a month-to-month basis, yeah, the 0.5 here, to be honest, was over-optimistic, right? I mean, from 0.1 to 0.5, it's a very, very big jump. 0.2 is the result. It's still positive compared to the previous one, right? But much less than the expectations. I don't even know where expectations were at 0.5, to be honest. I don't know. It's a very big jump. Okay, so it's a dead NFP. Unless, I mean, we could see some late response, let's say. Dollar yen moved up. It did what from 90, where were we? Let's just see, we're 15 minutes. So we opened up right here. 889, 109.80, it went up 991. I mean, 15 pips. I did say actually I'm expecting anywhere between 10 to 20 pips to move today. That's happened. I'm surprised. Because we only saw that on dollar yen. On the other pairs, like euro dollar, didn't move. Not even like, not even 100, not even 10 pips. From 63 to 54, 54. Sorry, that's like 12 pips. Embarrassing if you ask for an NFP. Now, safe haven is going up. Yen is pushing lower. Okay. This is purely though on other flows. It's nothing to do with the NFP. It's an opportunity to buy the safe haven. Don't forget, guys, that usually when institutions have some big orders to place, they will drive the market in a like 2 weeks, 3 weeks, sometimes time period. They will drive markets slowly to the biggest orders that they have to place until the end of the month or until the end of the week or whatever their books have actually, right? And they will use the NFP to place those big orders. Okay, that's why you see the liquidity and volumes being very, very, very big during that time. Now, we've had this particularly good NFP. Actually, to me, if you ask me, this is a very big number, 225, right? And with average hourly earnings also increasing, that really tells us that the Fed now has, the Fed, just to make a parenthesis here, looks at the PCE inflation, not the CPI or the average hourly earnings particularly, but this is the focus. Doesn't necessarily mean that they're not looking at those numbers. And now with the increase to 3.1, this tells us that the FOMC or Fed chair might not be as dovish as he was in the previous FOMC meeting. He wasn't too dovish, but the fact that he wasn't hawkish is seen in the current environment as a little bit dovish, right? Don't forget that. And we still keep seeing dollar-yen falling. Okay, so we've had this swing over here, entered, got out, then entered, got out. At least you can see for yourself that on the dollar-yen, these levels were quite helpful. They were reached as well. Euro-dollar, still not moving. This is pound-dollar, still not moving. It's very tiny, these moves. And then the Aussie dollar as well. It's at the moment it's just trading mixed around 66.78. We had an equal move to the downside and also to the upside over the past 7 minutes. Okay, which really suggests that there is something else. There is a different component that institutions are actually looking in this current market. Now, the validation, this market actually validates to me what we've said a little bit earlier. We've talked about the particularly impressive move pre-NFP, right? Normally you will see markets trading sideways. You're not going to see any big moves, any decisive breakouts. Markets will just be pretty much trading with doji candles every hour in, hour out. This wasn't the case. We had all the pairs actually moving, weakening against the US dollar. That was exactly what we talked about this event being priced in, okay? So institutions got in quickly, they got out quickly, they pocketed some profits, and now everything is calm. Now you may ask, how to trade this? Well, the best idea would be to not trade this, okay? Because nothing is decisive over here. You would be able to get some further close after at least this hour's candle closes, right? So we're looking at 4 p.m. CY time, 2 p.m. GMT for a close of the candle. That will give us at least some clues. We'll see that dollar-yen particularly is highly volatile. It's always a good option to trade, right? Especially for NFP. So what I'm going to do now, why don't we just go particularly on the dollar-yen, right? And see, look at it a little bit deeper, okay? And see what we could potentially explore as an opportunity after the hourly close or even after the next hour's close, okay? Now, this is when you could potentially start using any other sort of analysis that you use. Particularly, it could be Elliott waves, it could be Gartley partners, it could be momentum strategy, it could be swing strategy, whatever it is. I am interested in Elliott waves, as you probably know already, and looking at dollar-yen. We talked about, one second, let me just delete that quickly. We talked about dollar-yen in this morning's market size video. I was looking at this as a corrective move to the upside, right? A, B, and C. Now, you'll be able to notice that we've had wave 1, 2, 3, 4, and potentially 5 ending, right? Which means now that we're going to start moving lower. However, usually negative waves, when you get the first wave done, second done, like the second wave, it's sharp. So usually you're going to have the fourth wave lasting a little bit longer, right? Which means this is wave 1, this is wave 2, okay? We have a wave 3 up here, most likely. Wave 4 is going to be that one over here. And then we're going to see prices start moving higher, right? Now that also suggests that within that move, we have a smaller degree move, which is 1, 2, 3, 4, and 5. Let me actually just use those quickly, right? 1, 2, 3, 4, and 5. Let's make that minute. Do not obviously take this as a proof or as investment advice. It's merely some analysis based on Elliott waves. We've had this move, and then we're looking at this 1, 2, 3, 4, and 5, right? Everything is respected in terms of Elliott waves anyway, because even within this minor minute wave even, we have a sharp wave 2 and an elongated wave 4, right? So leading diagonal over here, 3, we're looking at 4, and then 5. Okay, this means that this is most likely going to be a wave C, okay, and from there, we can start looking for prices at a higher level, okay, to move lower. Now, what does this mean for the short term? For the short term, we need to go down to let's go down to the 15 minutes, right? And let's see what we have. Okay, so wave 5 ended up here, correct? Which is wave 3 in the minute degree, right? So usually we're going to see prices correcting lower, which means we're going to have a ABC move or WXY move, depending whether we have a standard zigzag or a more complex pattern. Now, if we look at this move over here, I'm getting A, B, and C, correct? The question is, are we expecting prices to move lower? And it's very possible to actually get prices move lower, because usually wave 4, when there is 2 wave degrees together, for example, we'll have the minute and the minute here, we're going to get prices wave C moving down to this low, okay? So this makes a very good area for this wave to end, which means what? Which means probably this is a W, X, and Y, right? That makes this ABC. This makes this an X, which is another ABC again. And potentially, we're going to see prices again moving down with an ABC move, right? Which actually is against what we've just seen, because dollar-yen, at the moment, at least dollar is supposed to be strong if we take into consideration the latest results, correct? So we might ask ourselves, if we ended over here, okay, this could just be an ABC, and this means that from here, we're going to move higher, and we're going to have, this is 1, this is 2, and then we're going to have 3, 4, and 5 higher. This is still the case, right? Nobody says no. So what we need to pay attention to, okay, in the short term, we need to pay attention to this level over here. If we draw a Fibonacci retracement over here, well, currently, let's put these 0, 1, 88. Let's put the Fibonacci retracement, the 61.8, which is the golden Fibonacci. Okay, let me just delete all those support and resistance levels now, because we don't really need them any longer. Okay, we've done what we've done. And that's it for the time being, at least. That means one thing, right? We've got 1, 2, and we're going to get 3, 4, and 5, potentially, right? And this wave could end up here, which is another intersection level between trend lines. Since we bounced over here, we need to look at the further upside now, right? What we want to do, ideally, is cross above the 110, okay, decisively with a good break. We're going to get a retest probably, and then move up for wave 3. So we really need to pay attention in the short term at this low down here. Any move to the downside, okay, any move to the downside above the 109.67, above that level is still and can still be considered as a simple correction that is going to extend to wave 3, then 4 and 5, okay? So in case prices move below that low, 109.67, this is the level you should focus on for the time being. We are going to have prices moving lower, which means the continuation to the downside, the correction to the downside is going to continue, okay? Now, where is it going to go up to? We don't know, but we have a special tool for that to help us. Now, if we look at the 161 extension, okay, over here, this is for wave 1 A and B, okay? Fibonacci extension gave us exactly this level, right? So we've had A, B, C. Now, what is left to do then, right? We need to check at this level again, but this time we need to take the whole wave ABC and go all the way up to this move, right? To this high at 110.005, which is a very good, strong resistance as well, psychological level, where we have a lot of orders coming through. Now, we need to get the 0.618 is not good because it's very low. The 1, it's below the 109.67, okay? So it could be very possible that prices actually are going to move down anywhere between these two levels, okay? These extension levels. So this is where we could expect a bounce. Prices coming down here anywhere between that level and then start moving up, okay? This would be for the W, X, and Y scenario, okay? The shorter term, the shorter correction ABC would mean that anywhere around this level, we're going to get a bounce and prices will start moving higher. And that suggests that this is going to be an impulsive move to the upside that is going to revisit the 110.5 at least, okay? So what we saw here during the NFP was a very weak attempt to close the 110 level, okay? So markets pushed up. There were some very good selling orders triggered because institutions had a few to close, right? And then prices moving lower. Now, the other thing we need to also look at, okay, is we need to look at this top as well, okay, which is also another bottom here. This is a retest level, which again makes a very good level for a potential dip, right, for a potential collection. This is the 109.5, which is also a very good round number. Okay, expect round numbers always to create at least a short-term bounce. Okay, so you see, at least for the dollar yen, the opportunities can be very, can be multiple, okay? Not opportunities, let me just say the scenarios that could play out. Now, every single candlestick gives us new information, whether it is on the 1 minute, on the 5 minute, or on the 15 minute, or on the 1 hour. But intraday basis, we really need to focus on the hourly because the hourly is where most experience happens, and particularly when news flows are coming through. If there is not news, that is then the case between the European Open and London close, which is the most volatile session, with obviously the European Union, London and also New York time at some point trading the biggest markets at the same time all together. Now, let's have a quick look what is happening with different assets. Okay, so you can see in the 15 minutes that the euro dollar is also moving lower. Okay, this makes, of course, a stronger dollar, correct? Euro yen on the other side is also moving lower. This supports, then there we go, and this is how we validate. This pretty much supports that, okay, the NFP report was positive for the dollar and prices are moving up for the dollar. Now, what this seems to suggest, though, the dollar yen, we look at the dollar yen, we said about safe havens actually becoming stronger. When you are in denial about that, you need to go and check gold, and gold is moving up, right? So safe havens are indeed going up. And then what else is moving up? The dollar Swiss franc is supposed to, because based on some safe haven flows, right? But here we have a different story. Do you remember why? Swiss franc is weaker than the dollar because interest rate differentials don't really allow institutions pretty much, right? They don't allow, based on the daily operations, to go long on the Swiss franc at this particular case, right? So you'll be able to see that safe haven flows that come coming into yen and also the gold. Aussie and Kiwi are pretty much unchanged, okay? So if you ask me, the markets are trading, yes, indeed, the NFP, but not as much as the case should be in any other normal market environment. We see the Q and the Aussie have had a big drop during the day, okay, and now they pretty much stopped. This means that risk, at least for the time being, risk on environment is taking a breather. Safe havens are again seeing some moves, but we don't, of course, know how long this is going to last. So it's 3:52, 3:53, let's say. We have 7 minutes to close that particular candlestick on the 1 hour time frame, okay? And what is really good to check over here, also some other good activity levels. One, of course, is over here, because let me delete that stuff, because I think we are really hiding a lot of critical information here. Okay, so this makes things a little bit clearer now. All right, so let's draw a little bit a few levels, right? So one is this one. We have the closing and the opening of another price. Another one, this one is the high activity level, okay? And then, of course, you have that top, which is a close and open of another candle, okay? All of those have been taken out during this release, right? And here's the thing now, right? Let's do that one as well, okay? It's the previous high, fresh high, pretty much. Now, let's keep that on. Why I actually draw these levels, there is an explanation for it. If we see prices closing above that level at the end of the hour, okay, and volumes also increasing, let me just get the volumes. I should have them all volumes. Oh no, I don't want that on the candle. Okay, for some reason those are looking a little bit, we need to make them a little bit fatter. Yeah, 3, Okay. So you see that volumes are increasing, right? And we are above the average as well. So that means that all these trades that were closed up at 110, okay, they are now now the institutions are actually re-entering the markets, right? And when institutions re-enter the markets, and believe me, this is the case, it really, really matters where the prices are closing for the hourly candlestick, right? So if prices close above 1.9796 or even above, actually the first level will be 109796, this is a positive indication for dollar yen, okay? Which means that most likely this is going to be a correction to the downside and prices are going to move higher. Now we could see prices actually remaining in this range for quite a while, okay? But this will take a few hours at least to have some proper indication. With volumes increasing, you see how these volumes, this candle, I want to change actually that color for this. I will make yellow, I will make it red because it just doesn't really make sense. Okay, there we go. You see that this volume, this current volume, is the largest of the past few candles. Okay. There is no volume over here, and that suggests that we've had some take profits over here. From up here, institutions sold, okay, and then they started taking profits here. That's why the volumes are low. There were no new positions, there were just closing of positions, and then we started moving up, okay. Volumes again, not much, just dry, purely on take profit. And now what we want to see really is prices closing above 109.815 to at least get an idea of some short-term bias, which is going to be in this case to the upside. Okay. The other pair I wanted to look quickly is I want to have a quick look what's happening with the equities. Okay, you will see that equities are not really doing anything. They're not moving. QE is falling, which means that Aussie should be falling too. Yeah. Oil for some reason is falling as well. Okay, when you see oil, Aussie, and QE falling at the same time, it means that commodities, but inflation sort of triggered commodities are falling, and that indicates that there is some risk on taking off the markets. Not particularly that we're going for safe havens, but at least that risk appetite slowly is let's say balancing out. Okay. Now for the safe haven, we talked about dollar yen. Okay, and we are should really keep that on the watch list to really see whether we're going to move higher up or higher down or lower down. In case we cross below that level, most likely we're going to get an ABC X ABC. Okay, this will be a double zigzag, just as a reminder. In case we stop anywhere above this level, okay, without taking that low and move higher, then we want to see this high broken, okay, and then another move to the upside. For the short term, at least, we should get this high taken off again, okay? And this would be the 109.98, is not this one, okay? This is a false break, and we might not see it again if there is a weak attempt for bulls, just as pretty much to make retail traders think that prices are going to move higher, right? A weak attempt to the upside would be the 109.97, missing the 110, and this would indicate again another move to the downside. So I want to thank everybody for watching, for being with me here for the monthly NFP. In case you have any questions, feel free to send them on. I will upload this recording on YouTube and our social media very shortly. You can comment there and I will get back to you as soon as I can. So enjoy your weekend and I'll see you again next month.